Okay, let's now move over now to our conversation for the day, which is the Nigerian capital market. We're reviewing the first quarter performance and, of course, taking a look at what may likely happen before the end of the year. And joining us right now to look at these issues and more in the studio is Dagogo Iyeimo. He is the CEO of Milestone Capital Mgt Limited. Thank you for coming on the show. Good morning.
Thank you. Good morning.
Yes. Right now, the index is looking not too bad. Right now, above the 43,000 point level. But just before we go into the numbers and the details, I'd like you to tell us what you think was the market performance for the first half of the year.
Well, the market performance for the first half of the year, I would think it's been a bit muted. After the major rally of the last year, of over 40% move. This year, for many reasons, we've seen the market quite subdued, kind of. If not for the oil subsector, we probably would have seen almost a decline in the index. So for substantial reasons, you've got from the international pressures, the winding down of the monetary easing in the U.S. Okay, I mean that is taking off quite a bit of capital out of the system. We've seen the internal issues around the CBN, and don't take away also the election year kicking in. So yeah, for these issues, we think that the market has stood reasonably still. Yeah.
Okay, the first quarter, which is still part of the first half of the year, and there were reports that investors in the capital market were said to have lost as much as 960 billion naira, between January and March. What was responsible for this?
Yeah, when you call these numbers of trillions and billions, you kind of frighten investors really. But that's why you want to really look at percentages. The market didn't significantly move much. Yeah, it was it didn't a downward move, but somewhere around less than 0.5%, somewhere around that for the first quarter. Okay. Yeah, like I said, I think that you already had these issues coming in before the end of the year. Significantly, the monetary easing, which was being slowed down in the U.S. You already knew that capital was going to start shifting backward here and there. And then we had all the issues in the CBN as well, suspension and money missing and all of that. So, of course, the market is the reflection of all these occurrences. Yeah. So yeah, the market, like I said, even though these were supposed to have some measure of negative influence on the market, but the market stood still. Again, as the foreign investor content was slowing in the first quarter. Okay, you still saw the retail and local investors coming and to absorb a bit of those, and that's why we didn't see that kind of dip, that we had seen before now. Yeah.
Okay, it seems that we had more inflow of foreign investment in the first quarter of the year, despite all of the factors that you mentioned, to have taken out money. Do you agree with that? Do we have more inflow of investment? Yeah,
in terms of not in relative terms, but in absolute terms, yeah, we had more. Yeah, because the Nigerian market is a lot more opening now. There's a lot more confidence. Don't forget the rebasing, and all of that. So you find that in absolute terms, yeah, we had more foreign inflow, but into the market there was a decline, and that decline, which is expected, which is good for us, the local investors, filled in a good portion of that, and that's why we didn't see a deep drop, in the markets, in the indices of the market. Yeah, but in absolute terms, yeah, and we should expect a lot more of capital flows into the market, foreign flows.
Were there areas that those funds really were targeted at?
we as a country are doing a lot in in electricity. This is a huge capital area, and as you try to get it right, as you try to move these ownership, you try to move ownership from public to private, capital is coming in. So as we continue to strengthen that area and get it further correct, I think that much more capital will come. So in that, and in the energy sector, and that's why even in the market you saw that the energy sector continued to enhance the indices of the market. Yes.
Okay, still looking at the performance during that period, the benchmark index dropped by 5.2%. I'm looking at bringing the numbers again to you, to 39,186.93. That's I'm looking at the first quarter now.
Yes.
From 41,329.14, which it opened in January. Now, what were those market forces or any other issue, so to speak, that may have contributed to this movement in terms of the drop in the index?
Well, first of all, there was nothing to be frightened about in real terms. You couldn't say some major volatility. You need to come from the last year and the last quarter. You saw that huge move. Okay, from 27,000 we moved to 41,000 in the last year, and most of these happened in the first quarter, in the first 2 quarters, and the last quarter. So you find that there's been some kind of relative correction in pricing, reasonably, from a market that's been sitting down there. So we're seeing this correction, and that move, of course, for last year happened. And give us as much as over 40%. Now we don't expect that's how you see a market that is working. You don't see those volatilities up and down. So you see
no sharp movement.
No sharp movements. You see a correction as the price goes up and it corrects itself again, and it's not it's not such a terrible dip. It corrects and then moves a little further, and then that is a market cycle, and that's what is expected. So there's nothing outrageous, in the first quarter, shedding just 5%, haven't held on for end for over 40% in the last year. No, I think that was a normal culling, and so we shouldn't read anything extraordinary into it. Even though there were those issues around why it could cool and stabilize. I would rather that it was a stabilizing period.
Okay, what subsectors in the market actually, made headlines? What are those significant areas, that you can point at, looking at the first half of the year?
Yeah, particularly the energy sector. FO was outstanding in that regard, coming from somewhere around 100 naira to what it is today, over 200 naira. That's over 100% gain just in the year. And then you have a few of them as well. You had corn oil also do. So you see that the energy sector. In the last, in the first quarter, I think we saw a move of close to 30%. Okay, yeah. So in that subsector, so that has significantly driven the market. The banking subsector was practically flat. It dipped a bit. Of course, the insurance isn't picked up yet, and then the food and sector, we've also seen it's been reasonably flat as well, but it's the market's been sustained essentially by the energy sector. Yeah, in the first quarter, even up to the second quarter.
Oh, we're looking at involvement of other companies like Transcorp, those involved in power and energy.
Oh, definitely.
So we're looking at government policies in a way impacting on the capital market.
Yeah, government.
When you now put in view the energy companies that are, performing in the markets.
Yeah, the energy companies. Don't forget what Transcorp. even though it's a holding conglomerate. It is the ownership of the Ughelli power plant, which is also an energy project that's also driven it significantly. So the energy sector is powered a lot more of what's happened in the market, okay? But that's not to take away from the food and beverage, fast-moving goods sector. That is also held on reasonably, okay? You've got the cement companies. You've also got 7-Up, you know, pushing from somewhere around 70 naira. It's over 100 naira today. Okay, so yeah, that's you know, we've seen some of those significant gains in those areas, but it's significantly the energy sector that has done a lot of really good to the market.
And I'm sure a lot of investors would have kept their eye on the Orlando ConocoPhillips deal.
Oh yeah,
with a significant decision or deal that was made.
Yeah, you know, we followed that for a very long time. You know, the delays kept coming, but eventually it was closed somewhere before the end of the last quarter, and we've seen the value that has brought already. Oando was somewhere around 18 naira. Today it averages at 28, 30 naira. That's a good over 50% move, you know. And again, that's the energy sector, you know, helping to push the market forward. Yeah. So.
Okay, I would like you to just hold the thought for a minute. We're going on a break now. Dagogo, we're talking to Dagogo Iyeimo. He's the CEO at Milestone Capital Mgt Limited, and we have been reviewing the performance of the capital market in the first half of the year, and of course also trying to look at what the remaining half of the year will bring to investors. So we'll be right back.